You're listening to Improv-ing Business, where personal and business finance take a front row seat. I'm Brandon.
Hi, this is Rick.
And today we're going to be talking about year-end tax saving tips.
Yes, very year-end.
Yeah, just right under the wire, specifically for individuals.
So, as you know, we always like to talk about things timely. And today we're going to be talking about tax savings before tax season.
Most people don't even think about that.
I know, when it really makes a difference.
But December actually is the time of year where it's sort of the last time to save on your taxes in April, because it's the last time you're going to be able to make adjustments.
Yes, and people don't like to think about this because they have a bunch of presents to get out. So we're thinking that maybe after the presents are out and you're bringing everything back to the store, that you should think about, well, what should we do about taxes before New Year's, before we start opening up the champagne? Yeah,
so a really narrow window. The 26th to the 29th is when you have to think about this.
So anyway, as we always have a story, and sometimes the stories are really applicable, sometimes they're partially applicable, and sometimes they're just really stretching it.
I think this one's a decent one.
Yeah, that's a good one. Yeah, that's a good one. So one of the things we're going to be talking about today is a donation, a non-cash donation before the end of the year. And a lot of people get confused on this, and the story I have actually is a true story. A client of mine years ago donated, of all things, a real Picasso.
Wow. Had a couple lying around?
Yeah. Yeah. And without, giving too much about who the client was, in some respects, yeah.
Wow.
He had some lying around, decided to donate one. And the way it works is that if you have a donation that's over $5,000, you got to go through a whole big thing, and we'll talk about that later.
Yeah, because they don't want you to just give some Hummel doll and say it's $5,000.
Or make it yourself and
say
it's a Picasso.
Yeah. I value this at $80,000. This Hummel doll I made out of mud.
That's right. It's a Picasso with one S.
But, I changed my name to Picasso with one S.
And so what's really interesting is that I looked at this work, and it definitely looked like a Picasso. It was really out there. He was, the guy was really in the Cubism. That was his the style at this time, and it really was an interesting piece of art. But we had to go through all this stuff about getting an independent appraiser to look at it and appraise it, write up a report, and sign this form that we have. And so all these steps you have to go through that are on Form 82, 83, and you don't have to memorize these forms. We're not going to be quizzing you on this. Can you imagine?
That's next week.
That's next week.
That's next week for the business one. There'll be a quiz for this podcast.
That's right. And what business forms are supposed to file.
We don't like to call them quizzes. We like to call them knowledge celebrations. I had a teacher in college who said that. And I was like, I prefer to not be in this class.
Well, I guess that would work if we break out the champagne.
Yeah. Oh, yeah. If I got the drink while taking tests, it'd be okay.
Yeah, right. So we went through all the steps, filling out these forms and getting the appraiser and this whole thing, and we did the tax return and took the full deduction, which was quite high. Quite a high, if you could think of, a real Picasso, how much those are worth. And this person was a high net worth individual. So we got the deduction. And about a year or so later, I get a letter from the IRS, and they're challenging the appraisal.